Welcome, everybody. Welcome. Yep, a live stream again. Silver, gold, platinum, all things precious metals. Glad to be with you. It's good to be with you. And we are talking on the 27th of December. No markets today. No markets today. But good to have you. Please tell us where you're from, what part of the world is checking in. It's nice to know when we're on a Panama time frame where you are coming through. Also, remember, all these aspects that we'll be talking about, ref trading, links are associated below. You can also secure precious metals. We've got 24 likes on 100 people. We'd prefer that percentage to be higher. Help serve us. We're taking the time out on our rest days to give you updates. So here's a popular opinion. I don't want it to be about the person. I want it to be about the opinion. Play the ball, not the man. So it's not too important who puts the opinion forward, apart from saying it's someone with a view. And let's have a look at it. People need to understand precious metals are in. Let's get this quite a strong view. People need to understand precious metals are in the final months or year of a 26-year bull market. This is the bubble phase. So there's a couple of things that I need to say in this, and I'll be replying to this. First point I will make as a throw-out comment is precious metals does not do bubbles. Everything else does devaluation against precious metals. Okay, so precious metals is never in a bubble. Something is in a debasement. Something is a debasement. However, in the case of silver, because of a number of things, there is a real concern regarding supply, and there is certainly a shortage of supply of silver, and you will be getting to a point where eventually price will fix that and supply should at some point recorrect. It is not present. It is not the situation now, and you don't switch on mines in a hurry. And in actual fact, the ESG, the green agenda, and everything else you've been shown that has been highlighting all of this is part and parcel of further restrictions on mining, particularly in the Western world. Canada knows what it takes to get a mine out nowadays. I will be watching, by the way, your comments and chats as we are talking here. So these are further limitations on future supply. So at the moment, gold going up, gold is not typically consumed. It can be brought back into the system. The fact that gold goes up is not that gold's in a bubble. It's a fact that fiat and debt are a bubble. You should never reference gold in terms of a bubble. Can you get an extremity of price in silver due to undersupply inside of the monetary metal? So silver is going to respond like gold as a monetary metal. And then because of industrial use and suppression, then get a further supply dynamic that sees it be incredibly short and have an overshoot in its relative valuation to gold. Yes, you can get that. And it won't be a bubble, but it will be an excess overvaluation of silver relative to gold brought about by real concerns, real draining of above ground supplies, real lack of investment in the ground supplies, and you get a whiplash effect, and that doesn't get fixed in a very short time. There are very few dedicated silver miners, and you haven't had a big run in finding new silver for dedicated silver miners that has been 26 years in the making. It hasn't even started yet. It hasn't even started the correction of finding additional silver in the ground for mines. How many new miners have you seen listed on the stock markets that are dedicated silver miners? Very, very few. There are very, very few. So a couple of opening gambits that I just want to say in how we position ourselves differently in terms of the views that are being expressed. Remember, it's a view. It doesn't mean it's a bad human being. It's a particular take, okay? And we have a different one. And my goal is to keep you focused on what I feel is probably the best take that will serve you the best. Now, the heading in the YouTube said something about parabolas, and people are kind of maybe a bit confused about what even a parabola is. It's an exponential movement in a chart. And we'll talk more on that in a minute, but that's just the quick part. In other words, it's non-linear. By the way, inflation that has been in existence and is central bank policy should see the buying power of money every year go down by the rate of that inflation. And when you suppress that from being shown to many, it gets suppressed for a long period as you go through the financialization of everything, which we will talk about as well. And that hasn't started 26 years ago. 26 years ago was 99, 2000, and that's the point that this person is referencing as the beginning of the boom in gold markets. And we say, why start there? Why start there? And we'll have a look at his chart and his share there as well. So this is just for the benefit of a conversation piece. We're not taking anybody down here. Please don't get too excited about the personal aspects of a differing opinion. This is just interesting discussion topic of one person's view against another. We'll have a look at that chart right over here. So here we go. One of our top tips is when you're talking about a market, avoid using the word definitely when talking about the future on price behavior, because there's nothing definitive or definite about the future. We all are on the on balance of probabilities realm when we talk about the future, and we can all be wrong, and some of us can be slightly closer to the truth than others, and others can be spot on and maybe miles out. Who knows? We're all going to be on some continuum of guesswork, but you can do educated, smart, on balance of probabilities guesswork, and that's not definitive. You don't get to say the final months of a melt up on this chart. This is not even a log scale chart, which has the additional aspect of making this look disproportionate. It has the additional aspect of making this look disproportionate. If you look at our response to that particular tweet, let's go and get it up and show you and talk you through each of the aspects. In actual fact, in a log scale sense of the word, we haven't had a single moment yet which has met the same scale in log scale terms of that particular post. So let's show you on a log scale chart our response. You saw that runaway chart that he was showing, the proponent of that view there. That's the two candles here. This is what's happened in the 80s. That is substantially bigger. This has also happened. Individual candle months, we have not even had a candle month that has done anything like that one. In fact, this is a 6-month chart, so it's half a year. We have not had a half year that has done that range percentage log scale. That is when you're getting into blow off territory. The biggest candle you have is the current 6 months that would have started July and is ending December. It's not finished. You don't have too many days though left before we go New Year. And that candle, in log scale terms, has come nowhere near to meeting that candle, not even that candle. And it might make it around being something like this one here, this one over here. Let's use a different color. So in terms of log scale, remember, it is percentage move. It is percentage move that is far more significant. We're probably here. You might get a spinning top. You might go straight into that for the next 6 months, which will be in percentage moves 50% bigger than what you've already done in the last 6 months. By the way, 6 months ago, I think you probably could have got silver around 24, 25, and it's done 3x. So imagining doing 50 times, 50% more than 3x. Well, that's about 4.5x by percentage scale. So again, long time frames should be looked at with log charts. And this is optimally a bit deceptive when you look at it like that. So let's have a wee peek at where we were. This was 6 months, January 23. Sorry, that's July 23. You can see where we've been going on gold a lot quicker. Silver's really only started getting going. The gold-silver ratio was expanding, which is why in the first part of the bull, we said, stay on gold until silver triggers. We then got the triggering of the primer here inside The macro HVF, we've covered this a couple of times before. You know this chart quite well, all yourselves. And we are to say to you, you're having your first big log scale moment on silver, and it's been driven by dynamics you've probably never had before, a chronic shortage. Now, when we look at the log scale chart for this one, and we can compress a lot of the fixed pricing before and pull that out a bit, the last 6 months has been spectacular. And there's not that many that are bigger in silver. But the problem you have is gold's going up. Gold's barely started, and it hasn't even really begun to run against the fiat-based debt collapse system. That candle is smaller than that one, I can tell you, but it's probably the second or the third biggest candle so far in silver, and you're going to have a bigger one than ever before. There will be a candle coming that will absolutely annihilate this one. That is my prediction for you. A 6-month period, in percentage terms, log scale down here, that will annihilate the 1980s. So you're sitting in an environment where some people are telling you, hey, you're in a blow-off, you should be heading for the doors already. So resist the temptation to buy into narrative. In other words, we're all flagrant drunk bulls pushing you into something that you shouldn't want to be in. In fact, you should be hitting, and silver is a bubble. Or gold, this is actually the gold chart, is a bubble. It is going parabolic on the big time frames. It is indeed going parabolic, as is the debt debasement and the rotation out of debt. And the only time fundamentally, so there's going to be fundamental triggers and there's going to be technical triggers. And there's two parts to this. We watch all parts, the fundamental part, and we have our opinions, and the technical part, and we have our opinions on the technical side. And if you are looking at this, you will be thinking this is a bubble about to burst on gold until you understand the scale of this entire move. When you go to our response, in actual fact, why start in the year 2000 over here? You actually began the perversion of gold. So if you talk fundamentally, 1913 was the beginning of the perversion of the financial system. It led to a fixed price on gold that later had a revised upside at $33 and later $36, brought about by the proliferation and the proliferators. So the game actually begins for me in 1913 and the creation of the Fed. And you were in a fixed, which is compression. That is working against the gold true price discovery. It's a suppression period. They then leapt it up after confiscating the gold from the citizens. The Statists stole from their citizenry. And then you had catch-up all the time you were. Once the Fed came into power, 1913, and deficit spending started to get pushed, you went into the sinking of the Titanic, the Bolshevik Revolution after World War I, which was 1415. Amazing how those things all started to happen after the biggest new nation that was being established had the central bank put in. You had the sinking of the Titanic, pushing it through, the creature from Jekyll Island, the creation of the Fed, World War I, Bolshevik Revolution, World War II, 40s, finishing in the 40s. And that's still round here. This is a 67-year bull that spent the early 3-4 decades being totally suppressed by a government diktat. And that is why once the Vietnam War started and more of their shenanigans, the free price and the 1971 decoupling, you started to get real price discovery, and it came in a hell of a way. So rather, again, than the gold price has been consistently allowed to adjust, you had a lengthy period of suppression. And in actual fact, doing the maths for you right here, 91%, and this brings you to the law of the parabola, you will sell too soon. Your biggest problem you're going to make is that you're even asking this question and thinking this question right now. You should be, how much more can I load safely in investment? And if you're HVF method trained and in our community, how you can maximize with judicious use of leverage and a stop loss, building an even greater leverage position to further turbocharge your wealth. Click the link below to book a call, because that is going to absolutely take you to next levels if you're prepared to do it. 91% of the gains came in the last 4% of the time. This was a 67-year bull market from the 1913. If you want to say, I'll take other dates. If you want to say 1933, well, the Fed was created before that, but let's say there was a depression. It was a depression low. If you want to take it from 1933, be my guest. The start of the Fed was the start of the problem. This is not an Elliott 5 wave with the biggest in the second wave as well. This is ever bigger cycles of expansion due to the acceleration of debasement. It was harder to get away with borrowing and ridiculous government spending during these years because there was still a frontier spirit in America. Low government, low tax. Taxes came only in 1913 and they were resented and people were angry. There was a real frontier spirit back then. It took a while to break everybody down to the point where you're getting a 9-year mortgage on a car with a 60% flipping balloon payment and then rolling up the shortfall on your next car purchase. That didn't just happen, the financialization of everything. It took a while. People understood the bankers. Every president that was assassinated understood and resisted the Pharisees of usury lending. Every single one. 91% of your gains in this event came in the last 4% of time in this bull market. That means at the absolute low in 76, you were at $100 and you went to 873 there. 91% of the gains. To all those that think I've left it too late, I'm too late, I've missed the train. There are so many carriages on this train. It is the longest train in the world. The fact that the locomotive has left the station, you can jump on any of the moving carriage. Chuff, chuff, it's still going slowly. Run alongside, jump on. It's a 150 carriage long train. You haven't missed it. It's going to take days to finish going through the station. You run along and jump on. That's what is your opportunity. It's more about when it gets to its destination that you were there for that last best bit. 91% of gains, $100 to 873. All this before is getting you from 35, 36 round here, up to 195, back down to 100. Now I'm going to talk about the 80s bull market because I think it's we're not going to be the same as it. We're going to be bigger, harder, meaner than it. But within that, if we have to choose one bull market, and I think it's just one leg of one major bull market, the Fed as debasement, money debasement entity is the full bull market, and you're in it. It has 67 years bull. It has 20 years pullback bear. It has another, this is all one macro bull, just with pullbacks and jumps. You just have to increase your time frame. We're on the 6 monthly time frame here, by the way, just so that you understand. So that bull had 20 years of pullback where we financialized absolutely everything, and we had the dot-com boom. Then you had a stunted small bull. It's not even a bull market on its own from 2000 to 2011. This whole thing is one bull market from 1913 to, and you're in the middle of it, and you're in the third phase of the bull part, which is going to be the most violent phase, and it's going to absolutely make the first leg look small. The second leg was already small. You went from 200 to 1,927, and I'm telling you that's small. It was an 11-year bull leg, and you had a 5 years of pullback to 2016. So what happened during this period? Subprime, housing going up. No one was really buying gold. It was not really about gold after .com. Everyone was wading into houses. Everyone was becoming a Miami apartment flipper and a property developer. And all the TV programs were property developer. That wasn't a gold bull market. Gold was just quietly going up. and doing what it does. No one was paying much attention to it, really, in the mainstream world. Everyone was still dropping everything. Okay, the dot-com equities things quietened down after 2000. Now it's housing. That's what happened. And then you had the QE that came, and then gold started to move into 2011, but they put a stop to that. They put a stop. Compression, financial repression, they put a stop. They put a stop to it, much like the fixed years, the first period since 1913 until 1970, which only saw gold move from $20 to 33. At that juncture, it was underperforming. It had catch up to do. The good news is you're getting to the point of the ultimate catch up in the third leg up, which will be larger than the first and the second legs in these green diagrams. And in log terms, this is barely anything like what went before it yet. You are yet to go this fast up. By the way, that's not to say there won't be pullbacks. There's not going to be 4-hourly, daily even pullbacks at some point. In fact, at some point, I suspect we get a half time. This was a half time period, and you made $195, and you pull back all the way to 100, almost half. Almost half. You probably pull back 45% at that point, and you could get that. Government intervention. We have already had, by the way, increases in margin for trading silver has gone up from 20,000 to 25,000. That's happening. That's minor. I don't think that's going to have too big an effect. It might get a little bit staccato for our 90s and 100 run target. That might be a little bit behind it. But those 90 and 100s will blow off. You'll be at 333. You'll pause maybe a little bit longer. Again, they will start like they did in CV19, weaponizing against retail buyers of gold and silver and making it harder and introducing laws. That could have short-term effects. Only through orchestrated government-approved mechanisms will you be allowed to invest in the future potentially, or you will face more draconian costs, or there might be some confiscation or some super tax, whatever the case. Statism might cause a half time. And even still, that only happens, they don't want to do that too soon because they don't want to draw attention to gold and silver. It's only when the mass is starting, the pig in the python, the normal curve. The early adopters are in, the legacy OGs of silver and gold. Apparently, I'm a newbie, by the way, according to Cliff Hyde. I'm a newbie here. I started this channel during the sound money of gold in 2009, by the way. The sound money, the case for gold in 2009. The videos are so old and the audio was so crap, I've deleted half of them. I will be sharing with you a video from 5 years ago on silver and gold property ounces, how much to buy in the United Kingdom, in dollars, etc., with average property prices. How far, and the case for 4 digits. Silver from 5 years ago. I would like you to re-watch it. It was a part 1 and 2. I will be sharing it on X. Don't forget to follow at the Market Sniper. Separate event. We did the numbers, the currency conversions, everything, dollar, pound, average housing. You will see what an average house might cost in due course, and also why you can get to 4 digits in silver and beyond. So for those that were doing Bitcoin and spidery, amazing little secret sauce tricks that felt they had insider things are the real newbies to precious metals. I come from a country of 2 miles deep mines. We grew up with gold and mines in our skin and bone, and we understood the reasons for why gold and silver. I have family members working in mines. I visited mine shafts as a kid on school. It's what we do. And I know the real reason. I know the real reason, monetary-wise. We've been in the scam ever since I was very young. I couldn't talk to people about normal financial things. I thought they were all too stupid. Okay, anyway, now that we've dealt with being called a noob or everybody's bald uncle by a Bitcoiner, we'll thank him for the retweet anyway. Let's get back to business here. 20-year bear market, 5-year bear market. You might get a half-time bear market that will be short. This was, don't forget, you tapped out 195. It took 6 months, 1 year, 18 months, and during the second year, you still traded down. At one point, you were looking at 2 years down until you got the look one way, go the other way hammer, and next thing you knew, you were starting the most profitable part. The most profitable part will come after the hardest part. That's how obstacle courses are built. It's to get rid of the riffraff. They can't all clear the final obstacle. They sit there like losers and cry in the mud and start talking about buying Bitcoin. That's when the most profitable part comes. That's the most profitable part. And by a mile, a country mile, 91% of gains. You went from a low. Of course, I've taken it from the absolute low. You did, of course, earlier trade 195, but nonetheless, it's spectacular. You can take it at other data points. Those numbers will moderate a bit more. But the best part came in the final 4% of the move. Think about that. Think about that. You think, oh, I've done well. I made some money. Imagine how much you're leaving on the table. Now, that sounds like a greed reflex. And many of you won't survive 2 years of bear market. You'll doubt it. The problem we have this time is I don't think they can afford to contain it for that amount of time. I am saying this is going to be more violent and the rest smaller. But there will be rests. There will be rests, guys. There will be rests. But I don't think it spans this duration. So I'm telling you what you want to hear. Always be careful of people who tell you what you want to hear. They might want something from you. I'm just saying that's my take. This is the biggest, meanest, fastest, most angry. Because when you understand the whole thing is a bull market, the harshest, most vertical period comes at the end. It's the definition of a parabola, friends. Do you understand? This is a parabola. This is all a parabola. That was stage one that took you 67 years. This was the bear market. That was stage two, a mid-range part that was truncated. You are now doing this bit. That's the definition of a parabola, the law of the parabola. And if those moves made people generationally rich, and these moves even made some guys very wealthy, what do you think is possible here? Well, the few that stay in, that do not get shaken out. Your entire job is, how do I ensure I stay in? What are they going to tell me to try squeeze me out? What absolute mayhem, what boogeyman are they going to revolve? This is CV19. They are going to utilize mass media. By the time precious metals is mainstream and people are rejigging, they are going to use the weaponized media against you to absolutely caricature you as someone who is evil, foul, dirty, idiotic, rock collector, various other things. You know the system that they brought to bear on you for rejecting the medical interventions. You know the media. You know the gaslighting. You know everything. They will use that same weaponry against you. Hear me now. To shake you off the mechanical bull that is going to jump and jink and left and right and try get you to be thrown off. Your job is to stay on the mechanical bull and ride it. For every second you stay long, you get deeper into the parabolic phase where far bigger numbers happen in far shorter times that will embarrass this and absolutely embarrass that. You are in the third wave up of a macro Fed-based fiat proliferation job. It didn't start in 2000. It started with the creation of this financial system, and the gold has been in a bull market ever since. And they managed 20 years of repression here. They managed a number of years at $20 repression, a number at 30, and they managed a short spell here of pullback when they did financialization of everything for China. And China did the subprime that America had done before it, and did the property boom fundamentals. And then you had the Shanghai Accord in 2016, and we have resumed the up leg since 2016. It didn't start 26 years ago. It started in 1913. It started in 1913. That's where you are. Real inflation, real Weimar Republic. There is a story of the man, and Jim Rickards tells it, who became hugely wealthy, borrowed all the crappy fiat. I'm not suggesting you do this, by the way, because interest rates could spike and absolutely kill you. But if you could lock borrowing in with confidence, he bought everything, coal, he bought infrastructure, he bought everything in Weimar. He ended up the richest man in Germany. He probably had insiders. He probably had contacts. Thank you for the super chat. We appreciate it. I'll come back to the question. So we are in the parabola part here of gold, and silver has started even later, because once they couldn't dominate gold, they were dominating and keeping a much smaller market down through nefarious actions. So the parabola on silver is going to be more acute. It has been flatter for longer. It has underperformed for lengthy periods, apart from the little blowout bulls. But if you were to characterize it as a parabola here, it's going to be more like that. Yes, it had its bump of overperformance here and a little bit there, but the macro simplified curve, there are so many people who love moving averages. They don't want to look at a price. They just want the simple curve. That's your simple curve for silver. That overperformance there, even to gold, in terms of time and amount of climb, is going to melt faces. It's going to melt faces, friends, because even at 3-to-1 to gold, silver is still cheaper to put in solar panels than gold is. That's what's going to happen. So it's still going to be used. And you may even, in an insane moment of absolute perversion, you may even have a single moment. I'm not suggesting this is going to happen. Please, this is not headline bait. But you could have such a ridiculous overshoot. You could technically have a spike at one point beyond the value of gold. I don't think it would happen long, but you could. It's not impossible. Just like people would have laughed if I'd said, you're going to have a negative price on oil. It's not a sustained moment. No one's going to have that as a sustained moment. But in the perversion of the world and the overshoots, you could breach the 1-to-1 ratio in a second, just because factories are set up to work with this metal. They're not set up for the other one. They haven't got the supply chain set up, and the price just keeps climbing up. You could. You do not get supply online for mines at the rate that they need it to come when you have absolutely made it a terrible thing to do, to mine. You brought BlackRock, Lowell Finkelstein, into play, and he's determined we all need to die. There's too many of us, and we're not allowed to dig holes in the ground anymore. It's too bad for the climate. And everything else that goes along with BlackRock, whom you don't hate enough. And I hope you leave a little note on Twitter at BlackRock to remind them how much you resent them for the proxy power they acquired, because many of you invest in ETFs and let them accumulate all your votes that you're entitled to as a shareholder in the equities you buy. Remove your money from the ETFs, buy the silver miners yourself, take your own voting proxies yourself, and stop giving power to a group of people that are absolutely destroying our world and guaranteeing tokenization, which will be the interim step to stripping you of all your assets. So how long do we run? If the low is 2016, well, the person who posted that thinks it's 2000. I think it's 1913. You can decide where you want to start. My overall view is you're in a macro parabola that at times has had a little bouts of truth wake up into 1980, a tiny bit into 2011, but is now really going into the final waiting, the final countdown, the final countdown awakening of the parabola. And, you know, even if you take the stunted bull over here, which is an incomplete cycle of bull, you're at 200 and you went to 1927. That's not a big growth bull, not by my reckonings. 74% of gains were made in the final quarter. That was never a parabola. You look at that, you look at the log scale candle, the biggest one is this one. You've already surpassed that in 2 months. That one and that one. You've already surpassed that. You're in this category and plus. You're not doing this. This is almost a trend. There's a semi-candle, medium-sized That's it. That's the biggest one. And there was very low parabola aspect to that bull move on the macro time frames. You can see already this is a hammer, up, 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 up in a row. 1, 2, 3, 4, 5, 6, 7 big candles and getting stretchier in a row. That's more parabola category. So your gains will be more like this, 91% in 4% of the time, rather than 74% in the last quarter. And even if it isn't, and it turns out to be 74% in the last quarter, you haven't entered the last quarter. You're barely starting to go parabolic. That's like being here in 1980 and selling because, hey, you've gone from 35 and you're now trading 60. Woohoo! No, 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 and no. Even there, you're leaving it all on the table. You're leaving it all on the table. If you got in there, you would have gone up and you would have been lower 2 years later. And I don't think they're going to have a halftime of the same scale ever again in this very violent parabola. In short, it's going to be the easiest time for you to be leveraged long in retail. Most times I've traded and broken into this trade on lower time frames. 7 out of 10 times I've been right. And the upside I'm gaining is far beyond the stop losses I'm taking on an individual basis. And I'm getting 7 for every 10 and only losing 3 out of 10. Why? Because I'm assuming bull in a major parabola. It's not that difficult. Assume bull in a major parabola. At some point, it'll be wrong. At some point, it'll be wrong, and you'll get a vicious slap, and you'll get stopped out on the last entry. And we keep trailing all these up to take profits. You can maximize during this period. There is much more to come. 4,530 for gold is nothing, friends. Think about what you buy for 4,500 today. What you used to be able to buy. Think about $873, what that might have bought you in 1980. Excuse me. Compared to 4,500 today. Even on their CPI, AU, CSL, divided by their fake statistics, that is lies, like everything else that lies, you are yet to make it there. So the key thing is the law of parabola says you need to be in, ideally, for the final 10%. It's not about being in for the first 50. And many people think they've missed the bus. You haven't missed the bus. The best part of the ride is still coming. It's the end of the movie. They've just finished the adverts and the film hasn't even started. There's still railway carriages coming through the station at a slow pace. You can jog alongside and hop on anyone you like. I'll tell you when it's starting, the train's arriving in gold heaven on the other side, 100 miles away, then you'll have plenty of chance to jump off. And guess what? The party gets better and wilder because each station it stops at, better food, better wine, better quality of people all keep piling on. And by the time you're getting to the end, it's the best trip of them all. It's the best trip of them all. So there are people here telling you need to be out. That it's a runaway parabola and it's going to end badly for most people. And I'm here to tell you, you haven't seen anything yet. On the big macro time frames, you've yet to make a log scale candle like that. And until you do, you've still got more to go. And when you do, because this is a bigger cycle, expect another one right after it. Expect another one right after it. That is how big a bull and how massive the debt credit markets. Let's talk fundamentally. The quadrillions of debt and derivatives have to all unwind and be zeroed. The great forgiveness, yes, the great Shemitah will forgive all the bankers. They will be the most indebted. Who do you think's drawing on the repo market and getting billions in support to keep limping on? You aren't going to get much forgiveness. The whole rules of money will be rewritten, friends. This is an absolute phoenix. A firestorm is coming through, and it's going to burn hard and furiously. So the law of the parabola is you're going to sell too soon. You need to be in for the final 5% ideally. But hey, if you're in for the final 25%, maybe you jump early, you take 20%, you're going to do a whole bunch better than if you're in for the first 40% of the bull market when it officially began. And silver has really just started its breakout. This is the gold chart that we're being pulled on. The debt bubble is the bubble, not the gold. It is not gold that's a bubble. It is not gold that's the bubble. This is absolutely wrong phrasing for me. It's not gold that's the bubble. It's not gold that's the bubble. How many times do I need to say it? It's the debt and the fiat debasement. Gold doesn't bubble. It's readily supplied and available. There's plenty of it in bullion. It goes up in value as a store of value. It's the thermometer. The thermometer doesn't sit on your body and make you hot. It's not the sauna. The sauna is the fiat and debt market. The thermometer is what tells you it's getting hot in here, mate. It doesn't make you hot. Doesn't make you can carry it around with you in the Arctic. It's not going to keep you warm. It's going to tell you how cold you are. That's what it's going to do. The sauna is what makes you hot. Debt and fiat are at parabolic levels of debasement. The heat is here in devaluation. In Panama, love to meet you. Mutual friends, Mike B, Larry S at the Forte can connect us. Thanks. That would be great. Happy to meet. Silver Sailor, glad to meet you. Thank you for your super chat as well. We appreciate it. And yeah, have a chat for a coffee. So is everyone with me on how we stand in terms of the positioning in lieu of all of this? You have to conceptually grasp that this break is only really just beginning for silver. If we go back to when it really began for silver in the 60s, and you measure the percent move, let's say I'm wrong, you're not going to have a bigger cycle. You're not going to have a bigger cycle in silver than the 80s. There isn't more debt around. There aren't more nations all synchronized and over indebted that are all going to want gold and silver, not just America. It's not going to happen as big as I say. I'm wrong. It can be. I can't tell you definitively anything. You went up in silver 3,651% from that relative low. I'm going to take the ridiculous number for which there was no real price. There was a spot value, but you couldn't buy at $11. I'm going to take that ridiculous low, and I'm going to keep dragging up until I find 3,651%. This is if you had, in percentage terms from the low, the same size. The same size. The same size. Here's where I have to go. Okay, come back down. Let's calm down now. 3,651%. You would be at $450 odd. $450. Do you see that a move from 25 to 75 is not the same as 75 to 450? Call it 475, another $400. Another $400 potentially to 3,650, 3,700. The best is still to come, friends. You got to run 100. You're going to have to run 200. You're going to have to run 300. You're going to have to run 400. You know, imagine what that does to your P&L. Imagine what that does. And it happens faster and quicker. That's assuming you only get what 1980 gave you. You only get what 1980 gave you. To be clear, in 1980, America had about 35% debt to GDP. It's now 135% debt to GDP, and the unfunded liabilities are much bigger. The demographics are completely wrong now. The boomers are the biggest age group, and they are all drawing. They are all drawing from the state. So that's a conservative number, 400. I don't for a minute see it. I don't for a minute see it being that low. We'll be talking and you'll be following us all the way through that process. And I can say to you, you already now have a triple digit, deep in the triple digits number, just matching what happened in the 80s. That's assuming you think it's only like that of the 80s. Let's also remind you of the CPI, how it's been understated. Those statistics will all be caught up on and a clean sheet established as part of that. Those statistics will have to come clean, and the understate nature in that will be deeply exposed You can rest assured. So I will show you that chart as well while checking your chats. Where are you from? Missile use, yeah. Parabola. The best part is coming. It hasn't even started, friends. It hasn't even started. People will sell too soon. Hear me now. Repeat it like a mantra. People will sell too soon. The scale of the Ponzi and the stories that will come out and start to be exposed will illustrate exactly what we've done. Your biggest concern is Statists stealing your trading accounts, counterparty risks. These are where you should worry. Draining down some of your profits from your trading account if you are doing that with us and the community. Not too much so that you run out of margin, but enough that if they suddenly say, oh, damn, the whole bank's died. Hey, your trading account, the money was saved with that bank. Oh, we can't do brokerage. Retail's getting scammed. The great taking. Things around the great taking are the real risk. Friends, this has just begun. This is on your inflation re-rating. The man who says you're in the final months of a gold bubble, I'm telling you, the silver is not yet. It's only just taken the 2011 stunted bulls inflation adjusted high. It hasn't got anywhere close yet to the 1980 inflation adjusted high. You aren't even at that level of the 80s when debt was far lower and plenty of supply. You have a supply crunch now. You have a real supply crunch. This is physical supply. It's not paper story anymore. This is a physical supply crunch. A lot of people that have lacked trust have started buying and holding and demanding delivery. This is a physical supply crunch. You never got to that same level. You got a little bit of a short squeeze on paper with the Hunt brothers in the 1980s. You have not got to the fact that that is no longer a paper event, short squeeze. It is a physical supply constraint. They don't have it. They can't send it to you. That candle is just broke. And by the way, it's still shorter than that candle, which also followed that candle in terms of log scale, in terms of move. And were you even just to have those two candles type vibe up here and get up here, you will not believe what that price will be. These numbers are obviously in CPI adjustment and they mean nothing. The trade has just begun. The trade has just begun. It virtually began when Brent Johnson did his infamous pilgrimage to 25 comment, which was kind of here as we were breaking. We were YouTubing that, and it was like, what? Are you serious? It's quite interesting because the other time, the 5 year ago YouTube I did starts with one of his tweets saying, oh, is it going to fail for the 5th time in the tweet? Again, when I did the 5 year case for 4-digit silver and its value in property and multiples. That YouTube I will share on my X feed later from 5 years ago. You can watch what was said, part 2, where we discuss the case for the digits. So thank you to Scratch 1590. Let's do our super chats. We really appreciate it. We thank you. What if the price prediction becomes irrelevant? If we see new currencies appearing in the next years, we saw fiat disappear with the euro in the 2000s. You will. I expect that to happen. But they will have a signing off value. And the new thing will be brought in that will have a bridging value. And you will compare to the new thing on the basis of what they were when they were the old thing, if that makes sense. So there's a bridge point. There was a bridge point. British, the British pound, the Italian lira, all these currencies were given an entry point to the euro when they disappeared. The Greek drachma, all of them, they all had a final entry point at the euro. How many euros you would get per particular currency. That's how it was done. So we can only measure in the benchmark we have right now, and that will be true. You just convert. In that video, I have to do pound and dollar-based conversions for different properties in different parts of the world, and gold prices in pounds and different currencies, and you will just have a closeout level where they got pegged at. Jesse James, great stuff. Thank you, Jesse, for your euros. Great stuff. Thank you, Francis. Is the silver futures short trade at the COMEX now dead due to physical supply constraints moving east to China? My personal position and suspicion, without any related facts, is that the evidence is indicating that it is. It is very, very dangerous for a bank, unless, of course, it knows it's going to go down, it knows it's going to be bust, and it's just trying to slow the process down. It's going to be the AIG of the subprime market. Yeah, sure, insure that garbage debt with us. We'll make you whole. Yeah, sure. Yeah, sure. The big idiot, the toxic bank that everybody lays off their risk on. That was AIG. You may have a couple of zombie banks that are doomed to be extinct that may continue to try paper short just to create some sell pressure. But I can tell you, those are going to be marked for delivery, and they're going to keep being marked for delivery, and they'll be found out quite soon, because you don't have forever to deliver if you can't find it. So it's not something they'll be able to maintain. The amount that is being marked for delivery has rocketed. I got a percentage from X, some source, so with a bit of salt, take it, but 60% now. Where previously it was a trading speculators market with some delivery, now it's primarily delivery. More than half is delivery. You got to watch it if you go short, because you're going to get that little message ping that says, we'll be taking delivery, thank you. Please ensure the silver is delivered to the following desk, else default. And to be that broker, COMEX has to insist that everyone who is a participant can be made good on the contracts. So COMEX will say, please provide the inventory that we'll be delivering to the COMEX warehouse for delivery to the person who's asked for delivery. So that becomes a big, big problem. So in my opinion, that manipulation is being unleashed, and that is part of the parabola. Remember, don't get too caught in stories. The technical explains everything. You're going to be in a parabola. The story, the COMEX this, the COMEX that. That is the narrative that leads to the technical chart giving it. If you over-focus on narratives, you sometimes get chased out on the story. But the government's going to do this, the government's going to stop that. Stick to the technical story. You're in a melt-up parabola. You want to be there for the last 25% of the move, especially the last 5%. That's your game. You're going to be the mechanical bull that's going to try and get you out. Is going to tell you stories about government and this, and you can't do this, and we're bringing in laws, and da-da-da-da-da. They're going to keep trying to scare you. Very generous super chat from Dan Walder. Thank you, Dan. We appreciate you as well. Can you check Heckler if the price of silver gets to 200? The price of Heckler when silver gets to 200, I would not be in an honest position to even ask. There will be people that have the costs of Heckler. Don't forget, when silver goes to 200, when that happens, that also, as I've continued to say, it's not a bubble of silver, it's a debasement in fiat. Some of those salaries might have had to gone up. You can't just assume the costs of today will be applying, because those people won't be earning enough to come out. The oil eventually might have gone up a little bit. The other things might have gone up because it's a fiat and debt debasement, Dan. And what might happen is the costs will go up a little bit, but they are lagging. Wages lagging, oil lagging, everything lagging, monetary metals spiking. So the profitability will go immensely up, but you can't assume today's costs and say, let's say in a year's time we're at 200. You might find that the cost base might have gone up 30%, which is abnormal for a single year. But in a fiat debasement time, it may well have done. But the silver, of course, has gone from 75 to 200, which is going to be the better part of 150%. So, you know, the profit margin is going to be ever expanding. And we've got the target on Heckler. And given the generosity of your super chat, we'll certainly get it back up again in case you missed previous streams. But we already have a target on Heckler at the first target, and that's not the final target. Many people getting used to seeing this chart now. I'm going to go rather monthly of $85. I literally know it off pat. And we are having silver miners suppression. So regarding the previous super chat and this particular one, the one thing I've noted is that suppression hasn't fully stopped. The suppression has moved to the share market in miners. There's some people that are shorting equities, and the equities aren't moving as much as they should. Eventually that will unlock, and then the suppression, you get a violent rejection and near straight line moves. It's funny to say that when you've already got a move like that, but 85 is just a first target level for a little bit of profit taking and buy the dips if it dips back, only for it to go a lot higher into triple digits for us. So I think if you own Heckler, Dan, you're going to be doing just grand. And you and me both, and I'll enjoy celebrating that with you, and thank you for your super chat. So bear in mind, suppression has moved. The person before was asking, is it all but done on the silver market? I think the demand for physical delivery is breaking that. So have all the forces of suppression gone away? They keep retreating to the next line. They don't want equity rotation into silver miners. Think about this. Your Mag 7 is all your status surveillance guys that have the super currency called their stock price. Nvidia, FaceAche, Microsoft, all of these criminals and strategic CIA cleared, supposedly made in the garage and the dorm, you know what I mean, with DARPA funding. Amazon, that ran unprofitably for 2 decades, but always had money and kept investing and growing bigger and laying a foundation like they just knew they were going to become a juggernaut. Fancy that. Very interesting. Those guys have super high currencies. They can squash things. They're equities. They buy out things in equities. And they can sell some equity and get vast amounts of cash. The hyper-valued statist is almost, you need to think of them as government entities, dark state entities, CIA, Mossad entities. They are colluding to ensure they are surrendering your data and all the information about you. You are the product. You are the slave. You must be managed. They want 100% knowledge. They want to know more about you than you know about you. Those start to get dumped for silver. It takes some power away from the statist organizations. They don't want guys who are digging holes in the ground. That doesn't help them hear what I'm saying on this device and put it through an AI and determine if I said any danger words like Mein Kampf or who knows, something else that they want to try profile, fidget, what reading material I'm reading. That doesn't help them. Guys digging a hole in the ground, silver miners, they want to keep Mag 7 supreme, the status. All the politicians are in it. They were all buying Palantir calls, remember, because it's all weaponizing your data. It's a CIA, NSA, Mossad entity that was government that couldn't get away with the legalese that got quasi-privatized, for which government is the primary client and gives them unheralded access worth absolute billions and puts a cokehead like Carp who can't sit still in a chair, jumping and fretting and making no sense at all. Do you think they want those equities to start to be sold for silver miners? So the equity suppression thing is a thought that I have. Do I have proof? No, but I've guessed often and I've guessed pretty well because I know who the criminals are. I know who wants us down. I know who doesn't want us to help. So there is interest in not seeing silver and gold and the precious metals as the new thing where everyone storms in. But in the meantime, Zelensky, backed by billionaires in Ukraine, chosen ones, also sent funds by Zionists in America, Zionists in Europe, that is being cut back, half being flushed back to the politicians while they impoverish you, debase your currency, and ensure you are poorer and wealthier. They make themselves wealthier. Whilst all that is going on, Zelensky is using his ill-gotten gains and the people that back him and fund him to buy platinum miners in my country. Okay, but they ain't putting buyouts. I look at ExxonMobil and I saw it on the top 20 list for next year. They want you in oil. That tells me oil's going down. It's in JP Morgan's top. There wasn't silver miner anywhere to be found. There wasn't a silver miner. Let's just be clear. The silver price has moved from $23, $25 to 75. There's absolute shortages. It's absolutely needed. Everything that works better on silver. New batteries that are solid state need much more silver and will outperform all existing batteries. They want you driving a battery operated car so that they can just check you into the local prison anytime they want and take remote control over it. They want you in effectively a device when you travel. Tesla is an iPad on wheels, don't forget, that they control, snoop, listen, cameras everywhere. That's right. They want you in self-driven cars, literally, that they can take you wherever and decide whether you qualify to go anywhere. They want you in all that stuff. And silver is essential. And not one of the big bulge banks is saying, hey, Heckler's looking pretty good. But female politician that is on the actual board of determining a critical minerals for America that put forward platinum and silver along with rare earth minerals as critical, bought calls in Heckler, and we told you that was coming recently. That's right. Let's go find that tweet and just show you. So, do they want the word to get out? Bought Heckler. Critical metals. Let's find the tweets because you might think I'm making it all up. Here we go. There's old Blondie Locks. There she is. This is why we follow the politicians. The Nancy Pelosi stock tracker. Nancy Pelosi, of course, the person is far smarter than Warren Buffett and has outperformed him since she's been an indicator. This fine lady, Heckler, is the largest silver producer in America. She sat on the Environment Manufacturing Critical Minerals Subcommittee. She's had a history of being one of the best political traders out there. Since her September the 24th filing, she is up 200%. There she is. Nice little beak. There you go, you little beady-eyed cheat. There you go. September 27, 2024. That's when she bought. That's when she bought. It's almost as if she knew something. It's almost as if she knew something, you know? Isn't that interesting? This is an absolute fact. And do they want you in it? No, the other politicians want to get in. You're jumping the gun. You're here because you get the news before the news. That's what the market snipe is about. That's what HVF method is about. News before the news. Hit the link below. Join our community. News before the news. We'll be doing an update, a key update on precious metals in the community on the 29th. I'll be putting in a big update with the guys. And we'll be talking a whole bunch more. Always great. Francis, can you or the community recommend some Australian trading platforms for metals and or miners? Many thanks. I have no experience with who is solid there. I wouldn't like to put a name out there unless I did. So I'm going to ask the Aussies in my community who are watching the stream to see if they can put forward some suggestions. Take it with a pinch of salt. It's just the best of those people's experience. Yes, Debbie, that's her name. Debbie, let's see, does her name end with a steam? We wonder. Yeah, oy vey. Ramen noodle, here, Debbie Vossman Schultz from Florida, a Democrat. Okay, that sounds like it could be her. It seems she's Debbie that did Dallas and now doing Florida and getting rewarded for all the doing she's been doing. My struggle. To Mikanro, thank you for your super chats. We appreciate it. It's very kind. So that's what's happening. She's a Zio. I'm sure she's a Zio. There we go. Yeah, that's it. So we know. And the people are getting in. What are they getting in? It's not what they tell you. It's what you have to catch. The snooping, what they're doing. They're on the critical minerals. Guess what? Zelensky, yes, he is getting into platinum. As we've said, don't sleep on platinum. So that's where it is. Heckler has got a lot more upside to go. The politicians are probably in there. She's probably not the only one. Take it from me. They're all such good investors, you understand. They were chosen. They were smart. People who go into politics are dirty little bullied kids that were never going to make much out of their lives. A little bit loser, easily manipulated, tendency to be psychopathic, have low empathy, and very self-centered and keen to do anything that self-advances themselves because they have a lack of general talent, but they'll make up with it by being absolutely principle-free and morally bankrupt. That's the definition of a politician. Power-hungry, morally bankrupt, corrupt. Right there, you can quote me. That's who they are. That's who they are. They don't want a fair game. They know they're stupider, dumber, and more useless than most other people. They saw it in school, and they want to cheat, bend, be fed something for nothing for being an absolute nutcase, a psychopath. That's right. Very few exceptions. Ron Paul being one. If you're a US guy, you can take a bow for literally probably the only politician I can think of. And all the ones killed, of course, resisting First Bank were heroes. Jackson, I think it's Garfield, and probably a Lincoln in moments, although not universally, may well have been due some credit. So that's how we're doing. So let's recap, friends. The mathematics of a parabola. Look into the eyes. The mathematics of the parabola as we wind down. Thank you for joining us. There's 1,700 of you on. Give the gift of the Market Sniper channel. We will help make your friends wealthier. And if you come into the community, you can accelerate that. And you can be part of our update on the 29th, which I'll be doing. And I can certainly assure you, the gift of the parabola is the big bucks come at the end. It's a golf stick, friends. It's a driver. It's a flipping 3 wood. The chunk of meat is on the end of the stick, and you got to stay till the end. Don't gnaw the bone the whole way. You got to stay till the end to get the steak. That's how it works. This is a T-bone. You've got to be in there for the parabola. You can't be shaken. It's a bull ride. They want you out. They want you as retail out. They will terrify through the media. They will terrify. In the same way, CV19, they wanted you in to the medical intervention, and we told you be out. You need to stay in on the precious metals, the justification, the new found real money that was the old original money all the way around, the loopy-de-loop and back again. The boomerang has gone the full cycle, and it's coming to hit people in the back of their heads. The inversion, perversion is coming to hit people in the back of their heads. Mathematics is racist and antiseptic because you can't sustain a debt Ponzi at some point. Eventually, it shows you exactly why it is. That boomerang, that special chosen one boomerang has gone all the loop. It's been extended as long as it can. It's coming to hit at the back of the head. That's right. And the truth of what's hitting them in the back of the head is the silver price, the gold price, the platinum price, and the unavailability of physical stocks that is exacerbating both platinum and silver as well, which will lead to outperformances in the white metals. White metals matter. Do they matter more? I don't know. You can decide. But the white metals matter. You want to be doing your shoulder press every day. I can shoulder press a bigger dollar amount of money. I am getting stronger. Fiscally, I'm getting stronger. Join me in getting stronger. One of these days, I'll be able to shoulder press a couple of $100,000 worth of silver. I'm telling you, it's coming. But that won't say much for the silver. It won't say much for my strength. It'll say everything about the dollar and the fiat debasement. The bubble is the dollar and fiat debasement. Do not listen to people that ever reference precious metals as a bubble, particularly when it's gold and there is availability and supply. It can be sold. It's always there. There's no shortage of it. It's a scarcity metal generally, but there's still a lot of it around, not like platinum, which is more scarce, and it is not used up industrially. It can be made available. If it is going up in price, it's because the dollar is going down in value. It is a fiat and debt debasement. Start every sentence. You're sitting New Year, you're sitting around the Christmas table, eating those leftovers 3 days old and getting sick, and you're listening to your pasty uncle tell you, no, you should be buying NVIDIA. You say to him, you start, we are in a fiat and debt debasement. Get that, understand that. The foundation of the pyramid is a fiat and debt debasement scheme, and it is devaluing. The platinum XAG chart, switching to XPT. So we'll have a look at platinum, and thank you for your super chats, Hanninga, and then we'll close on that. Let's have a look at platinum. We will do it. XPT divided by USD. So we'll go, in fact, I'm going to type the full word out. I want the one chart that has real lengthy history. I've warned before, because I've done this before, that, and there's another erectile projectile. Again, it's chosen the wrong one. Let's just get that. All platinum, that one. Yep, we've done a lot of work on this guy, and we divided by silver. One second, sorry. Took my M away. Let's have platinum back, shall we? There we go. Thank you for your super chat, by the way. So this is a longest running falling wedge. And remember, palladium played a part in this. I've done this chart. Thank you for reminding me. I should be showing people this again. Let's go up by the months to a higher time frame. We go to the 3 months, and we can maybe go 6 months. 3 months is enough. Platinum is a relatively new metal. So here's what you need to know about platinum. You can see this guy's thought of it all. He's done it all. He's been looking at it all. He's a newbie. He's your bald uncle newbie to precious metals market. He's been banging on about sound money. Just in the last week, he decided that it was a bit of a thing. Here we go. So you are in the blue zone of great undervaluation in platinum when you are below the 40 platinum ounces. You are in the red zone of overvaluation when a silver ounce, you need 100 silver ounces to get platinum. So the yellow zone is platinum relative overvaluation to silver. You had a small period making a head and shoulder in and around the noughties. Platinum was 3,000s. Silver might have been $8, $5, $10, $11. Can't remember. You really are in a falling wedge. You've completed quite clearly. So that's your range for the limited history we have. Platinum is so new a metal, by the way. 60s that have really got properly defined, and people started to understand what they had here. It's super rare. It's 17 times more rare than gold. You need 17 gold ounces for every platinum. There's 170 tons brought up, or between 170 and 190 tons a year. There's 3,300 plus tons of gold a year. 17 times, friends, 17 times. You are in the low end of extreme platinum overvaluation, which is the reason why we always tell you, and we're one of the few that say it. And I've never heard Cliff Hyde mention it for all his great wisdoms chasing BTC and spiders and crypto and whatever else he does, who is only on the periphery of my vision for crypto. Your bald uncle has never heard him mention platinum being outperforming silver, or mentioning platinum at all. In fact, I have never heard much on precious metals out of him at all. I've only heard the odd thing. But anyway, nice man he may be, and I don't have an axe to grudge. This chart was drawn a long time ago by us, and it's updated regularly to exactly prove the question that the kind gentleman asked, the super chat, that we are quite able to answer. You have already completed, with HVF method technical analysis, your 3 impulse with the spills that must occur. Here's the spill there, here's the secondary spill, and then an up and over where you tried to sit on the 40 valuation and you couldn't hold, and you had a final spill. 3 spills, 3rd impulse completed, falling wedge spanning decades, started in 87, that falling wedge. And then you had a pop-up, and then silver got real strong, and you had a final dip out the bottom. We are waiting the break to the upside. And in fact, I'm so glad I went back to look at this. I'm going to put my alerts on this fella. Go and put your alerts, add an alert on platinum silver. Go and stuff it full of alerts. I don't want to miss when this thing is turning. Of course, I already have platinum, and I'm already long platinum on its original HVF for outperformance that we called on a weekly chart quite some time ago, before people started getting competitive about who's been bullish on precious metals. Not a competition I care to win. Many people before us, GATA, I was a member of GATA. I was watching the Jim Sinclairs and those people of the world since before 2000 and 2010. There are many people not alive today. The Ron Pauls of this world, many others that are sound money advocates. We all stand on shoulders. Nobody owns this notion. Nobody gets to assert ownership or I was here first. It doesn't really matter. The honest truth is I don't really care. Are you long? Are you going to protect yourself? The best phase is coming now. Thank you to all those that made the points that needed to be made in our formative years that we were able to learn from. Thank you for the technical analysis. Thank you for the fundamental analysis. Thank you to everybody. This breaks to the upside. Platinum outperforms silver. It's always been my view. It's repeated on YouTube many, many times. That said, I'm a huge bull silver. I'm just an even huger bull platinum. But platinum will probably do like silver does to gold, platinum will start to have its absolutely mindless move in the second half of this process, which I don't even think we're close to starting. But by the way, it's kind of matched silver for this year alone, and next year it could outperform it. So there you go. Now you see it. Oh, we're not sharing screen. Let's do that all again with a share screen. Such a muppet. I stopped sharing screen. Let's go again. Let's show you that chart. Do the summary real quick. Sorry for that, guys. I stopped watching the device. There you go. That's your falling wedge. So let's recap that so that everyone can see. Extremity low, the blues is the devaluation, undervaluation, 40 silver ounces for 1 ounce of platinum. As I've already said, in terms of scarcity, you're at about 17 to 1 to gold, and you're at about 7 to 1 silver to gold. So 7 times 17 is 70 plus another 49. You should be at about 119 if it was scarcity derived. So platinum is really only true valued in terms of how it's found when it's up top here. You could make a whole new range. I've made this range of 140 just with the data that we have. It's only got back until 1969. You could shoot well beyond this. Ranges don't last forever, as you saw for oil. Oil used to be at a $10 to $35 range, and then it smashed into, you know, the hundreds and the 150s in that area. And then we came back down in a falling wedge. You might remember that. We called that. Well, that is part and parcel of platinum. You are in an absolute overweight platinum era right now. You are sub 40. You are sitting at 30 ounces. 30 ounces. That is cheap gold. That is harder than gold, shines brighter than gold, and doesn't get what's it when silver sometimes gets a little bit of a color on it, a bit of fade on it. It's not the word I'm looking for, but one of you will put it in the chats for everybody else. So this is an overperformer for me, but it's hard to get. Buy all you can. Platinum, platinum, platinum. The midpoint, by the way, this is log scaled. The midpoint is 70 between 100. It's 30 on either side. This is the midpoint. You're well below even the halfway mark of the historical range. You're well below the halfway of the mark. And I personally think you'll get all the way and you'll go to an all-time extreme high. Imagine that. Imagine what the number is. I've played with 35,000 to 250,000 with platinum. I don't talk about it a lot on YouTube. I'm not interested in getting unnecessarily mocked. But, you know, if gold goes to 20K, platinum can be 35. If gold goes possibly well beyond, possible, you've got to bear in mind quadrillions in debt. If you get 100,000 gold, for example, in a major blow-off, now that's quite extreme for many people, you could be 250,000 platinum, but forget about most people. And that dollar doesn't exist anymore. It'll be like in some other currency that you no longer can know, new one that was once crossed over from, you know how they'll hide and muddy the water. Yeah, okay. So let's just check. We've got all the super chats done. Thank you, Jeffrey Obertzer, for encouraging everybody to get us over the 100K mark. Will it happen this time this year? I'll get a CIA silver plate for good old churning out the channel to the tune of. Yeah, we may well do that. Patina, thank you for the super chat. Let's have a little look at Patina and see what's going on there. Patina. I'm assuming it's a minor. But Patina, no. Patina, did you mean platina? Let us know again, Ian. We're not sure, but thank you for your super chat. We're a bit confused. Patina, let's see. Is it a Stark? Buy Starks. No, I think he means platina. Let's go with platina. And let's go all. Let's see what we've got. Resources. Well, we'll analyze this anyway. I'm not sure you're going to get what you want. Let's have a look. Very high melting point. Yes. Is a copper product. Oh, it's a copper product. Okay, I'm looking for it. Some guys asking for palladium. So the other interesting thing, so we've done the silver versus platinum right now. Let's have a look at palladium, because part of the reason platinum got so hard hit and was able to be substituted and the industrial demand went down, which was very harsh on South Africa as the biggest provider as well. And that's why I called for the rand to actually outperform the dollar as well. Not because it's good governments in South Africa, It's just that every governance is bad, so forget that. But technically, it is showing us that. And you're talking about a country that has a much bigger mining percentage and commodity percentage than America does. And ironically, I think the Rand's going to outperform. And it tapped out at the 20s, and now it's 16. Many people will say, wow, that's ballsy that you do that. Yeah, they all steal. But the degree that they can steal is capped by the amount of money. And actually, there's going to be high value coming out of the ground. So palladium was what we were going to do next. So platinum got suppressed during this period because of substitution for palladium. So you should actually view the platinum group of metals, PGM, sometimes known as, and you will see that that has actually outperformed when you add all of them. That includes rhodium, palladium. There's some other really small nondescript ones that I wouldn't bother, that they're too small. But what you'll note is that while platinum is going up, so is palladium. Now, at one point, palladium, when platinum was 3,000, palladium was down here, much cheaper. In fact, it was even cheaper than that. This one doesn't have the history I want. There we go. And let's put platinum on here. You will see that palladium became a useful substitute. You were at a couple of hundreds here. When platinum was at thousands, you had 141 in palladium. That caused a major rotation. Once they realized they could substitute, well, who wouldn't? It gave you a pricing advantage. So what actually ended up happening, Kep79, thanks for your super chat. We'll have a look at it. So palladium now is just behind platinum. There's only a couple $100. It's only a small percentage. You got platinum at 2.3, 2.4, and you got palladium almost at 2,000. It's now trading consistently at about 20% behind platinum. Now, at one point, let's put the platinum chart on this one. Let's go platinum. There it is. You can see over here that platinum was significantly more expensive, 500% higher, all this period. And what then happened is substitution error. Bad for platinum, better for palladium. Palladium eventually moved super high. Platinum was flat. We got our upside HVF. Now they're both breaking. The platinum group of metals, which includes rhodium, which is absolutely another wild card, super small, very hard. They use it to protect gold and silver. You put a small amount of plating on it. It went ridiculously expensive, but very hard to find. And same percentage scale, you can see this. We've done this chart as well. I don't know if our friend Cliff High has ever cared to do this, and we've YouTubed about it. There's your rhodium super bull. In a relative percent point of view, there was the biggest run ever, actually, was rhodium, but then it crashed back down. It too is now going back up. So the overall platinum group of metals went down for platinum, but what you got was a huge run in rhodium and palladium. So the overall platinum group of metals, remember, just treat them as a category, were more than substituted, and palladium became almost as big a percentage at one point as platinum at those prices. Now it is lockstep running with platinum, and so is rhodium. This is a groundswell. This is tidal. All the boats are going up on this one, guys. All the boats are going up on this one. Thank you, Anna. We're delighted, and I love you too. Thank you for your support from Canada. We appreciate it, and hopefully we'll one day see you when you come down these sides, Panama way. Yeah, he's catching some sniper fire. He is. Yeah. Call me out. I'm a brawler. I'll come out swinging, but you want to be careful. How to call it? But actually, he did us a big favor, and he shared the tweet. And he's probably an interesting guy. I don't know too much about what he's all about, but yeah, we've been in this space for a while. We've been in this space for a long time. So that's that. Somebody had asked something else that I haven't responded to, and I hate not doing that. Can you look at silver 47 AAGAF? So let's try to do that. AAGAF. Great to have you guys. I hope you're getting some time off. OTC, just watch that. Obviously, it's speculative. It's going to be lower volume. There's very little technically to read here. Kep, you did have a little bit of a squeeze here and a little bit of a low vol and a nice gap there. and then you did a return move to the gap, and then you've been squeezing higher, and now you're going quite strongly up. The most ardent HVF method guys would have probably picked up something in that as well. But again, super sketchy. So the problem with this chart is don't have too much sunk in it, because the free float of trade is a bit small. I always warn of this. It may do exceptionally well. And by the way, some small caps will go on to become massive caps and will do thousands of %. So there's no problem with folks having a couple of real minor gambles out there on the smaller guys. But generally, you don't need to be pursuing the absolute smaller, and many of them will get bought out, and a lot of that growth will get organically inside a medium or a larger player. So yeah, I would still say don't do too much of it. And also if you have to get out in a hurry. So the volume is something you want to keep an eye on. Remember, if the average volume, the black line there, average is around, what's the number? The black line is 257,000, and the share is under $1. It's 94 cents. That means you're getting less than $250,000 trade by value. Now, the golden rule, I would say, is never be more than, a tenth of the average volume by size that trades on any given day. And if you're unlucky and you come on a low volume day, you might struggle to get out entirely. So watch that. But generally looking pretty positive. I mean, you can see the 3 impulse rising wedge here. We can read a couple of things for you on smaller time frames. The breakup, and this is how you squeeze higher. Something so bullish that the continuation pattern, which is normally like a bull flag down or a falling wedge down after a big move, it can't even go down because the buyers are coming in too strong here and they're winning out and driving it out the top. That's a type 3 rising wedge. Click the link below, book a call. You can find out all about this. In real bull markets, wedges break up, rising wedges break up, falling wedges can break down, as Bitcoin found out recently. Okay, good. I think we're done here, guys. It's been great checking in with you. It's probably the last time, or I dare to say the last time, because we've been quite active. But it looks like we might, on this amazing channel, finally get to our 100,000 mark at some point in the next few days. It would be great to do it. An endeavor of 2009. Wow. 2009. I started this in 2009. That was some 16 years ago, friends. 16 years ago. Limping. The market sniper, your favorite bald uncle, newbie to the gold and silver market, is the Eddie the Eagle of the Olympics in terms of YouTube performance, you know. I don't know if you guys know the Eddie the Eagle, but Britons love a loser. And he was this guy that was an absolutely garbage skier that represented Great Britain on the high jump, the ski ramp that jumps. And he became known as Eddie the Eagle because he was properly pants, but hysterical. He'd be like an icon. You know, he's like the lame kid doing the 100-meter sprint that everybody picks up and carries over the line. That is me. Achieving always at the highest level. 16 years, 16 years, and still under 100K. But never mind, we've had many a chuckle together as we've waged our war with the YouTube algorithm, and we will be defiantly ourselves till the bitter end, regardless on whose bad humor it falls upon. And we are here to tell you that great things are coming for you if you're a precious metals stacker in the new year. Thank you very much, Indy. You're super kind. We appreciate it. And yes, we'll be back to take you into the new year. Have a great one, guys. Thank you for checking out. Sorry for the failed screen share there. We will see you all later. Enjoy your New Year's. Don't do anything stupid if you're on the jungle juice. Keep it tidy. Let's all arrive in the new year with all our fingers and legs. And let's carry on fighting the battle for sound money. Sound money. Stay in the parabola. The mechanical bull wants to throw you off. Lots of influencers are buying into wanting to throw you off so that they can say they were contrarian. Everybody wants to be contrarian without being contrarian. The parabola speaks. You need to be at the end of the parabola. Most parties, I say, leave at 12. The witching period starts near the end. My kind of parties, you arrive at 12 and the real party starts. Yeah. That is the story of the parabola. He says with a gleam in his eye, knowing that you'll all be celebrating New Year. Good night, and bye for now.